Stop scrolling. If your savings app looks like a tumbleweed ranch, this is your sign. Today, we build your first 20 grand with a system so simple you could run it half asleep. I'll keep it warm, witty, and painfully honest. You'll leave with a plan, not vibes. Grab water, deep breath. We're going to set dials, not chase hacks. And yes, there's a tiny calculator moment you'll actually enjoy. Context and stakes. Most people aren't lazy. They're trapped by defaults. Rising rents, sneaky subscriptions, and interest that grows like weeds. Around a third of folks struggle to cover a $400 surprise. That's not a character flaw. It's math plus chaos. Our job is to tame the chaos with Rails. Rails turn good intentions into predictable dollars. You don't need perfect discipline. You need a repeatable path. What outcomes matter? 3 levers drive your first 20 grand. Lever 1, your savings rate, the percent you keep. Lever 2, your income, both your main job and any tiny side stream. Lever 3, your investment return, which follows if you pick broad, low-cost funds. Pulling all 3 a little beats yanking one too hard. We'll set defaults that make these levers work together. Here's the thesis in one line. Automate a 3-bucket flow for every paycheck. Build a tiny cash floor, crush high-interest debt, and invest the rest in broad, low-fee index funds. Add a small, focused income bump, and 20 grand shows up faster than your brain expects. That's it, not glamorous, very effective. Visual model time. Inputs to outputs. Inputs, paycheck amount, minimum expenses, debt interest rates, and current savings. The machine, automatic splits on payday. Outputs, cash buffer, shrinking balances, growing investments. Small tweaks create big compounding. Think vending machine for your money. Put in numbers, get predictable results. No mystery, just flow. Quick case snapshot. Meet Alex. Take-home pay is $3,000 a month. Expenses are $2,400. That leaves $600. Alex adds a focused side gig worth $300. Now we have $900 in monthly fuel. With a 3-bucket flow, Alex can hit $20,000 in about 22 months, even with modest investment growth. We'll map it step by step. Mechanics baseline. Default split for each paycheck once minimums are paid. 5% to cash floor until you reach $1,000. Then shift that 5% to investing. 10% as extra to any debt over 10% interest. 10 to 15% to index funds through your 401k or IRA. If your employer matches, prioritize the match first. The rest covers life without drama. Decision rules of thumb. If any debt is over 10% interest, it beats investing until the balance shrinks. Grab every employer match before extra debt paydown, because match equals instant return. Keep $1,000 as a starter buffer, then grow to 1 to 3 months of basic bills. Choose broad, low-fee index funds and ignore daily noise. Simple wins repeatedly. Risks and guardrails. Markets dip. That's normal. Guardrail, never invest your emergency fund. Jobs change. Guardrail, keep job loss essentials in cash. Fees lurk. Guardrail, prefer funds under 0.15% expense ratio. Lifestyle creep sneaks in. Guardrail, auto-increase your saving when you get a raise. We don't fight risk with bravado. We fence it in. Worked example calculator. Alex has $900 a month. First 2 months, build the 1,000 buffer at $500 per month. That's done fast. Next, $200 goes extra to a 19% card, $500 goes to index funds, and the rest stays for life. After the card drops, roll that $200 into investing. In 22 months, contributions alone approach $19,800. Modest growth pushes it past $20,000. Alternatives and trade-offs. Debt snowball can beat avalanche if motivation matters more than math. If you lack a match, an IRA might be simpler and cheaper. High earners might use HSA and 401k before a brokerage. Side income options. 1 high-skill project monthly beats 5 random gigs. The best plan is the one you can run for a year without hating your life. Implementation steps and defaults. Step 1, list minimum bills and kill subscriptions you forgot about. Step 2, open a high-yield savings account for the buffer. Step 3, enroll in your 401k up to the match, or open an IRA. Step 4, set automatic transfers on payday. Step 5, pick one side income move and schedule it. That's your launch kit. Defaults do the heavy lifting. Common pitfalls and fixes. Pitfall: waiting for a perfect month. Fix: start at a tiny percent and auto-increase by 1% each paycheck. Pitfall: chasing hot stocks. Fix: broad index funds and chill. Pitfall: cash hoarding. Fix: keep the buffer, invest the rest. Pitfall: overdrafts. Fix: move auto transfers to the day after payday. Recap and micro mission. 3 buckets: cash floor first, high interest debt extra, then broad index funds. Pull the 3 levers a little each: savings rate, income, returns. Micro mission for the next 24 hours. Open the savings account, set a $25 auto transfer, and schedule a 15-minute session to enroll in your 401k or IRA. Momentum beats perfection. Tiny steps today. Vinyl bridge and invite. If this reframed money for you, subscribe. Like and share to help a friend hit their first 20 grand. In the playlist, I break down index funds, debt paydown, and how to pick a side gig you can actually stand. We build wealth with boring moves that work. Direct, friendly, repeatable. Juno out. See you tomorrow.